Right, guys, if you could move to question number 2 of the BPP exam kit. I'm talking about the current version of BPP exam kit, which is of the Finance Act 17. All right, if you have any previous versions of exam kit, just throw them in the bin because they are useless. They will have the old exam rates, old P6 tax rates in them, so they are no use. So they are of no use. Please make sure you buy the new latest BPP exam kit from the market, and because they will have the new tax rates incorporated to them, or you can buy it online from bpp.com. Anyways, if you come to page number 3, basically it's page number 3 in my exam kit. I don't know what's it in yours, but that is question number 2. And if you have any other exam kit other than BPP, then question name is Stella and Maris, and it was examined in December 2015. All right, Stella and Maris, and it was examined in December 2015, and we're going to do this question now. All right, I'm doing the part A for now, although we will do part B as well, only part B1, because part B2 is relevant to inheritance tax, which we won't do. We'll only do part A, and we'll do part B, part B1 basically. We won't do the last part worth 6 marks, because that is of inheritance tax. When we move to inheritance tax, we might do that part as well. But for now, we'll only do these 2 parts, which are relevant to our syllabus, which we have so far covered, which include this property income, which we did in the previous video, and which also examines some pension income as well. Right? So it will, so far, whatever we have learned, it will basically examine all that which we have covered so far. Anyway, so that is Stella and Maris, question number 2, examined in December 2015. The always good way to start a question, always when you're doing a question, even in the exam paper as well, just move to the requirement first, read the requirement, what is asking. So when we read the requirement first, because there are huge scenarios in the exam, so it is always a better idea to go to the requirement section first, just see what is he asking. Now when we know the requirement, then we will read the scenario. When we read the scenario, we will have the requirement in our mind. So in that way, it will be easier. So because we will be considering that requirement while reading the scenario. All right. So we will apply that formula here as well. So we'll read the requirement first. So if we read the requirement A of this question, I have already shared the screen with you, so you can see this question on the screen. And after reading the question, I will have to cancel the screen when we do the question on the board. All right, although you can see the question now. But again, I would say that please buy the exam kit if you haven't bought so far, because it is always a better idea to have your exam kit in front of you. All right. So if we read the requirement, it says calculate Stella's income after tax and pension contribution for the tax year 18-19. It is always a good idea, it is always wise to read the requirement clearly. Please make sure you understand the requirement, what basically he's asking. Now in this requirement it says calculate. One key point is calculate. So basically we need to do some calculations. It's not theoretical part, it is calculation part. Another thing is that Stella's income after tax and pension contributions. So basically he's not asking us to calculate tax liability, neither does he asking us to calculate tax payable. He's asking that what would be his income after paying the tax and making pension contributions. So that's what he's asking. So of course we'll have to calculate the tax payable, and we'll have to see income as well. So when we deduct the tax payable out of the income, and we'll also deduct the pension contribution, so that is the amount which he is asking us to calculate. All right. And he's asking to calculate for the tax year 18-19. Please remember, our current tax year is 17-18, for which we are studying. But whenever, sometimes the examiner says that calculate the tax liability for the coming year, but he never asks you to incorporate the new, the coming tax year's tax rates. He will always say, assume in the question that current tax rates will apply in the future, which means we do not have to worry about the coming tax year and the rates of the coming tax year. We'll only have to apply the current tax rates which are given to us in the exam paper, which are given to us in the notes as well. All right, and tax rates will always be given to in the exam paper. So read the requirement again. So calculate Stella's income after tax and pension contribution for the tax year 18-19. If she does pay £90,000 gross amount into her personal pension contribution. Please remember, we only have to pay 80%. When it says gross amount, it means it includes 100%. So we have to pay 80%, other 20% is paid by HM Revenue and Customs. So that was about personal pension contribution. And in the after that it says you should assume that tax rates and allowances for the tax year 17-18 will continue to apply for the foreseeable future. Right, so because he's asking us to calculate the tax liability and do the calculations for the tax year 18-19, so that's why he's giving us in the below paragraph, he's saying that current tax years will apply, so you do not have to worry about the 18-19 tax year and the tax rates of that year. Alright, so current tax year's rate will apply. Now please come to the start of the question and read the scenario. We know that we have to calculate the tax liability. We know we have to see that how much is the total income. Then we'll deduct the tax liability, tax payable out of the total income. We'll also have to deduct the personal pension contribution as well. So that is the amount which we have to calculate. So let's see in the scenario what has he given us. It says that your firm has been asked to provide advice to two unrelated clients, Stella and Maris. Stella requires advice on the tax implications of making an increased contribution to her personal pension scheme. Increased contribution, which means that normally he's giving less pension. Now he's thinking about making increased contribution, so more contribution than currently. Maris requires advice regarding the lump sum payment she has received from her pension scheme, and the inheritance tax, we don't have to worry about that. Then it says Stella is resident and domiciled in the UK, received gross salary of £80,000 in each tax year. So £80,000 basically is £80,000 per year is her gross salary. So that is the employment income. Alright, then it says started investing in unfurnished residential property in 2018-19, which were financed with her own capital and interest only mortgage. Has the following property income and expenses, no accruals at 5th of April 2019. Rent received is £90,000. Mortgage interest paid in the year is £20,000. Now this mortgage interest paid, please remember, while calculating the property income for tax purposes, we'll have to take 75% of that, as we have seen in our previous video. Alright? For accounting purposes, we can deduct total amount, but for tax purposes, we only have to deduct 75% because other 25% the relief will be given while reducing the tax liability. Alright? And then after that it says other expenses are £11,000, which gives me the net income of £59,000 of property income. Has no other source of taxable income, wishes to make increased contribution to her personal pension scheme in the tax for 18-19. Personal pension contribution. So the following information is about the personal pension contribution. Stella started making pension provision by joining a personal pension scheme in August 2017. Now August 2017 is basically which tax year? Tax year 17-18, which means she only started pension in tax year 17-18. She did not have any pension in the previous tax years. Now when you do not have any pension, when you do not make any pensions in any tax year, you will not get any annual allowance for the pension purposes. Alright, I hope you know that. So when you make a pension, you only get the annual allowance in that year. If you do not make any pensions at all, you will not get any annual allowance in that year. Alright, so annual allowance will be applied in tax year 17-18, and it won't apply in any previous years because she did not contribute it in the pension. Right? Then it says Stella contributed $3,000 gross to her personal pension scheme in August 2017, so she contributed $30,000 in August 2017. She wishes to make increased contribution of $90,000 in the coming tax year. Alright, so although she in the current tax year 17-18 she only contributed £30,000, in the coming tax years she is willing to contribute £90,000 into the personal pension contribution. Alright, so now you have to do the question. So how can we start? We'll have to list down the sources of income, so let's start then. So first of all, she got salary, and then she also got the property income. So for property income, we'll have to do the workings, and I will not make the the normal pro forma which we normally make, the detailed pro forma with non-savings, savings, and dividends, because we only have the non-savings income. Salary is a non-savings income, which is employment income. The property income is also non-savings income. So we know that both of them are non-savings income. We do not need to make the non-savings, savings, and dividend pro forma. We can just make the simple pro forma. All right. So salary. How much is the salary in the current tax year? She has £80,000 of the salary. Property income, we need to calculate the property income. Some information is given to us, because that information, the property income which is given to us in the question, that is also a correct calculation for accounting purposes. But we need the calculation for tax purposes, so that's why I have put it as working one. So we need to do the working for tax purposes. All right, so we'll do working one here. Let me do just here. So that will be working one, property income. All right, so that is our property income. So in property income, rent received is £90,000. So we'll have to take the first of all rent, which is £90,000 given to us in the question. Then I got a mortgage interest paid in the year. We know that we only have to take 75% of that, so we'll take mortgage interest. Mortgage interest. 75% of that. 75% of what? 75% of £20,000, which is £15,000. So that's what we need to deduct. And we got other expenses as well. So other expenses of how much? Other expenses of £11,000 as well. All right. So 20,000 into 75%. That's what the restriction will apply. Because other 25% we will get the relief while reducing the tax liability. All right, so we'll only take 75% here. So, and the other expenses are £11,000, which makes £59,000 here. So of course it will be increased by £5,000, which makes the total of £64,000. Please make sure you redo these calculations. You should have you should always have the calculator in hand while doing the exam kits. All right. I remember in my class while I was studying for P6, our tutor used to say, if you do not have any calculator in hand, please make sure you leave the class immediately. You should have the calculator in hand. So that's what I normally do as well. I always ask my students to have the calculator in hand, do these calculations on calculator, because it will make you used to your calculator, and you will save your seconds while doing the exam in exam hall. Every second is important in exam hall, so you should make yourself used to your own calculator while doing these minor calculations. All right, and it is always a better idea while I doing here, because I cannot interact with you. So if you spot any mistakes, it will always be better idea to do these calculations yourself. All right, so that is a £64,000. So property income of £64,000. Sorry. That is income, which makes the total of how much? £144,000. So total income would be £144,000. So that is our net income. And please remember, that is a net income before personal allowance. We have to deduct the personal allowance yet. And I hope that you remember that personal allowance is reduced. Personal allowance is reduced in some circumstances. Could you remind me what are the circumstances? Personal allowance is reduced when adjusted net income is over £100,000. What if this amount is adjusted net income? What if this amount is adjusted net income? If this amount, £144,000, is adjusted net income, if £144,000 is adjusted net income, then our personal allowance would be zero, because we know when our adjusted net income is in excess of £123,000, our personal allowance will be zero, because for every £2 in excess of £100,000, our personal allowance is reduced by £1. All right. So our normal personal allowance is 11,500. All right. So we need to see that how much is our adjusted net income. So what is the formula? What is the formula to calculate adjusted net income? So we'll see it here. We need to do the working two. So working two would be about personal allowance. So we'll see the adjusted net income first. Let me see the personal allowance. So I will do the personal allowance in the working two. Adjusted net income. Adjusted net income. We'll take the net income. So net income before personal allowance. That is £144,000 in our case. Less gross amount of personal pension contribution. Gross amount of personal pension contribution. Please make sure you write on the full form. I've just written down as personal pension contribution. All right. So net income less gross amount of personal pension contribution. All right. Now, with regards to personal pension contribution, in the question, how much the personal pension contribution is? Within the question, it says that personal pension contribution for our current tax year 18-19, because we are doing for 18-19. Please remember this calculation which we are doing, that is for tax year 18-19. All right. That's what it is asked in the question. Now, in 18-19, amount contributed in the personal pension contribution is £90,000. All right. £90,000. Always remember that from our previous video, not even the previous video, the video before that, when we did the pension contribution qualifying for tax relief was higher of £3,600 and relevant earnings. So £3,600 and relevant earnings. Relevant earnings in this case is salary. All right. So only salary is relevant earnings. So contribution qualifying for tax relief is higher of £3,600 and relevant earnings. Relevant earnings in this case is £80,000 salary. So it will be restricted to £80,000. It won't be £90,000. Although he actually did contribute £90,000, but the contribution qualifying for tax relief is always higher of £3,600 and relevant earnings. So relevant earnings in our current tax year is £80,000. So our personal pension contribution for tax relief purposes will be restricted to £80,000. So that's what we do. We need to do here. So we will deduct £80,000 out of this. So if we deduct £80,000 out of £144,000, I assume it is £64,000. Let me do it on the calculator, just to be on the safe side. Please make sure you redo as well. So that is £144,000 less £80,000 of gross pension. So that is £64,000. All right. So we know that our the net adjusted net income is £64,000. So we do not need to reduce our personal allowance. Now we need to write it down here, because let me write it down. So because adjusted net income is less than £100,000, we will not reduce our personal allowance. All right. Because adjusted net income is less than £100,000, we do not need to reduce our personal allowance. We will not reduce our personal allowance. So our personal allowance will remain as our normal personal allowance of 11,500. So if we deduct 11,500 out of £144,000, how much is the total? Between the total of 132,500. 132,500 is the total. So that is the amount on which we have to pay the tax. All right. So that is our taxable income. So that is our taxable income. All right. Now, tax is always calculated according to the tax bands. So tax bands are always given to us in the exam paper. These tax bands will also be given to us. Tax bands are always given to us in the exam paper. These tax bands are also given to us in the lecture notes on page number 1 of when we made the income tax pro forma. So please make sure you check the tax bands So up to 33,500 it is 20%, and from 33,500 to 150,000 pounds it is 40%, and like that. All right. So that is our taxable income. Another thing as well, that because we have contributed into our personal pension contribution, that our basic rate band and higher rate band will be extended by the gross amount of personal pension contribution. So that was another benefit. While we studied our pension, I told you that there are a couple of benefits of personal pension contribution. So one was that you only have to contribute 80% into your personal pension contribution. The other benefit was that it will extend your basic rate and the higher rate band with the gross amount of personal pension contribution. All right. So gross amount of personal pension contribution is 80,000 pounds. So your normal, the normal basic rate band basically is 33,500. So 33,500 is your normal basic rate band plus 80,000 pounds, which is your gross personal pension contribution. So that will increase your basic rate bands. All right. So it will make it to 113,500 into 20%, and whatever the remaining amount is, so 132,500 less 113,500 at the rate of 40%. All right. Now this 80,000 pounds will also extend your higher rate band of 150,000 pounds, but we do not need to extend our higher rate band because our income is only 132,500, so we do not need to extend our higher rate band. All right. So it will extend our basic rate band with the gross amount of personal pension contribution. So you can write down working number 3 here as well. So that is our working 3. And in working 3 you can write down in working 3 our basic rate band. So our basic rate band and a higher rate band, our basic rate and higher rate band will be increased by the gross amount of personal pension contribution. Personal pension contribution, i.e. 80,000 pounds. All right. So basic rate band and the higher rate band will be extended by a gross amount of personal pension contribution, so which would make our basic rate band to 113,500, and it would also increase our higher rate band, but we do not need to extend our higher rate band. All right. So whatever the liability is here, so we need to calculate this liability. Please make sure you redo that. I mean, you do that. I'm not going to do that. And calculate this one as well. So now we need to deduct less this bit here, this one, the finance cost, less finance cost, and we need to take 20,000 pounds into 25%, because it is restricted to 25%, as I said earlier, multiplied by basic rate, which is 20%. That's how we did in the previous example as well, in the previous video. All right. So 25% of that would be 5,000, and 20% of that would be 1,000, if I'm not wrong. Please make sure you redo this calculation. Right. So please make sure you redo this calculation, because I might have done it wrong. All right. Now another thing as well, I hope that you remember from your pension studies, when we studied pension, we know that there is annual allowance. So we can only contribute towards our pension up to maximum of annual allowance. For our current tax year, it was 40,000 pounds. So we can only contribute up to 40,000 pounds in our current tax year. However, we have actually contributed how much? We have actually contributed 80,000 pounds towards the pension. All right. So when we have actually contributed 80,000 pounds, we were allowed 40,000 pounds. So we need to see that how much was annual allowance brought forward, how much was unused annual allowance. Now in the previous tax year, she has contributed towards the pension of how much? 30,000 pounds. In the question it tells us that she contributed 30,000 pounds towards the pension in the previous tax year, which means there is 10,000 pounds unused annual allowance from the previous year. All right, now that unused annual allowance in the previous year we can brought forward in our current tax year. But another thing as well, we can brought forward up to 3 years on a FIFO basis. Now in this question specifically, because she only started making pension in the tax year 17-18, she did not had any pension in the previous tax years. As I said while reading the question at the start, I told you that she did not have any pension in the previous tax years. She only started in 17-18. All right, so we can only use the unused annual allowance of the tax year 17-18. So we will have 40,000 in our current tax year. We will have brought forward 10,000 pounds from the previous tax years. So we will have 50,000 pounds in total. Out of that 50,000 pounds, we have actually contributed 80,000 pounds. So we have exceeded the limit. We have contributed more amount than we were allowed. We know that when we exceed our limit, whatever the excess is, that will be taxable as non-savings income. All right, so how much is the excess? We were allowed 50,000 pounds, whereas we have actually contributed 80,000 pounds. So we have exceeded the limit by 30,000 pounds. That will be taxable as non-savings income. So 30,000 pounds at the rate of 40%, because we are in the higher rate band now. So that will be taxable at the rate of 40%. And please make sure you write down here, that is note number, how much? Note number 4, working 4. All right, so that is working 4. And in working 4, I will have to communicate the same thing which I have just told you. In working 4, we will have to write down our annual allowance for pension tax year. All right, so that's what we need to write down. So our annual allowance for pension purposes was 40,000 pounds in tax year 18-19. However, we can brought forward previous 3 years annual allowance because Stella only started making pension contribution in 17-18. Her contribution was 30,000 pounds in 17-18. So we have 10,000 pounds unused annual allowance, which we can use in our current tax year. All right. Then we say that income. Now, in order to score marks, you will have to write down this note. If you do not write down this note, examiner will not know that how did you come up with this 30,000 pounds, and you will not gain any marks. All right, so you need to communicate to examiner that you know this rule, and in order to gain the marks. Right, so you'll always have to do this. You'll always have to communicate to examiner that you know this rule. All right. Right, so after doing that, excuse me, so after doing that, whatever this amount is, so that is basically tax payable, so that would be our tax payable. All right, so that would be our tax payable, but we do not need to calculate the tax payable. We have to see that how much is her income after paying the tax and after paying the contribution. All right, so we know her income anyway, so income is given to us in the question. So if you come to, because I do not have enough space left now, actually I will do it here if you want. I can do it here actually. So her income is basically, I will do it here, so salary. So her income is salary, and her also income is property income. So this information is given to us in the question, and we will take it as it is given in the question. So and she got salary of 80,000 pounds. She got property income of 59,000 pounds in the question. Yep. So 139,000 pounds is her income, right? Less tax paid. Less tax paid. So whatever the amount of tax paid is here, so you'll have to put down, we'll have to deduct from here. So that would be, I would write it down as Y. So whatever the amount we have calculated, that would be, that would go here. Now pension contribution. Pension contribution. We'll have to do another working 5. Now because her pension contribution was little complicated, Now, as far as pension for tax relief purposes is concerned, she contributed £80,000 for pension relief purposes. All right, that's what the gross amount is. Now, for pension relief purposes, the gross amount is £80,000, but she would have contributed only 80% of that. She did not contribute the whole amount. We only have to contribute 80% of that. All right. So when we contribute 80% of that, so let me do the working number 5 here. So that is working 5. £80,000 times 80%. So that is the pension for tax relief purposes. But she also has extra £10,000. In the question, it tells us that total contribution towards the pension is £90,000. For tax relief purposes, it was £80,000, but she actually contributed £90,000. So other than tax relief purposes, it's £10,000 as well. So that is for tax relief purposes. So that is for, other than tax relief. Other than tax relief. So other than tax relief is £10,000. So 80% of that would be £64,000. So £64,000 is for tax relief purposes, which she contributed. £10,000 is other one. So total amount contributed is £74,000. So total amount contributed towards the pension is £74,000. So we'll have to put the £74,000 in here. We'll have to deduct that one as well. So this amount, I would write it down ZZZ. So this is the amount which is our answer. So that is what was required in the question. So in the question it says, so what would be the amount after paying the tax and the pension contribution? So for paying tax, we'll have to do this calculation. All right, that's what we did in order to see that how much the tax was payable. And for pension contribution purposes, we'll have to do this calculation as well. All right, so that's what it was asked in the question, so which we have done now. All right, so that's our part A done. Please make sure you redo the calculations where I left. So this bit here and this, please make sure, just try to save my time and your time. So please make sure you redo these calculations and complete the question. Now if we come to question again, I won't take much of your time now. I've already exceeded the time. So if you come to question again, it says in the part BA basically, it says explain how the cash of £385,000 received by Maris as a lump sum for her pension was calculated. So Maris is basically the second taxpayer. I'm reading part B1, right? So explain how the cash of £385,000 received by Maris as a lump sum for her pension scheme was calculated. So Maris basically received £385,000 as a pension lump sum amount. Now she's wondering that how this £385,000 was calculated. She does not know it. Now we need to know more information about Maris. So information is given to us. So Maris is resident and domiciled in the UK and is widowed. Has 3 married children, 5 blah 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 blah. This information is not relevant. Just come to personal pension fund. Maris had a money purchase pension scheme which was valued at 1.3 million on 30th of January 2018. Please remember that lifetime allowance is basically £1 million. She has exceeded the lifetime allowance. She has had the pension of 1.3 million in her pension. All right. Now maximum, we know that maximum tax-free we can withdraw from our pension is 25%. All right. So lifetime allowance basically is 1 million. 25% of that would be £250,000, £250,000. So £250,000 we can withdraw without paying any tax. So £250,000 without paying any tax. If we exceed that amount, if we have withdrawn more than that, that will be taxable. All right. Now if we have taken it as a lump sum amount, that will be taxed at the rate of 55%. However, if we have taken it as an income, then it will be taxed according to the tax paying bands. All right. Now if we have taken a lump sum amount more than 25%, that will be taxed at 55%. If we have taken it as an income, that will be taxed according to the tax bands. All right. Now read further. Maris followed advice to reinvest £750,000 of the fund to provide taxable pension income. So basically £750,000 she has reinvested out of 1.35 million. sorry, 1.3 million. Out of 1.3 million, she reinvested 750,000 pounds towards the pension. Rest of the amount she took it as lump sum. All right, and marrieds do not understand. Marrieds do not understand why the amount of cash she received as a lump sum was 385,000 pounds. So basically, she had 1.3 million in her pension. Out of 1.3 million, she did not withdraw 7.5 million. Sorry, 0.75 million, 750,000 pounds. However, she withdrew the remaining amount. So if we deduct the remaining amount, how much is the remaining amount? Let me just do it on the calculator. So basically, she had 1.3 million in the pension. Out of, just wait me 1 second. These adds are so funny. So she had 1.3 million in her pension. Out of 1.3 million, she did not withdraw 750,000 pounds. So she reinvested 750,000 pounds. So the remaining amount which she withdrew as a lump sum amount was 550,000 pounds. So she withdrew 550,000 pounds as a lump sum amount. Now she is wondering, why was that 385,000 pounds which she received? She said, I should have received 550,000 pounds, whereas I actually received 385,000 pounds. How was it calculated? Now, out of that 550,000 pounds as a lump sum which she withdrew, out of that 250,000 pounds was tax-free anyway. All right, 250,000 pounds was tax-free. Now, if we deduct 250,000 pounds out of that, so 550 less 250, the remaining amount is 300,000 pounds. Now, this 300,000 pounds basically will be taxable at the rate of 55%. So she will only get 45% of that, which makes the total of 135,000 pounds. Now, if you are not understanding that, I can do it on the board if you want. I will have to erase one note out of it. If you just allow me, just bear me 1 second. If you want to note down, you can just note down. I'm on one side. However, I'm going to erase one note out of it so that I can do this bit here as well. All right. So basically, 250,000 pounds she did not have to pay any tax on. So tax-free is 250,000 pounds. Remainder. So remainder was how much? So she withdrew 550,000 pounds. Total amount withdrawn. Out of that, tax-free was 250,000 pounds. So the remaining amount is 300,000 pounds on which she had to pay tax. So the remaining amount was 300,000 pounds. On that, she had to pay tax at the rate of 55%. So 55% tax will be deducted. So 300,000 pounds times 55%. So that was tax. So out of that, 165,000 pounds will be deducted. 165,000 pounds will be deducted out of that. So whatever the total amount is, the remaining amount is how much? 135 less 300,000 pounds. 135,000 pounds. So that is the remaining amount. Now, if we total that, I assume it will be 385,000 pounds. So it is 233,85,000 pounds. All right. So that's how 385,000 pounds was calculated, which she received, and it was worth four marks, I think. Yeah. Now you do not just have to write this down. You will also have to write down in commentary style that lifetime limit is £1 million. 25% of that can be taken as lump sum free of cost. So 25% of that was taken as lump sum free of cost, and the remaining amount which she will withdraw, because 750,000 was reinvested, so the remaining amount, 750,000 pounds less 1.3 million, equals 550,000 pounds. So that is the amount which she totally withdraw as lump sum. Out of that, 250,000 pounds tax free, and the remaining amount will be taxable as 55%. So after paying tax, that is the amount which she got, 135,000 pounds, and the total of that is 385,000 pounds. So that is a £385,000 which she got as a lump sum payment. All right, so that's it for now, and I will see you in the next video, and we will continue with property income. Thank you very much and goodbye.